Hello there, savvy investors and financial enthusiasts. Today, we're diving into a topic that could potentially change your financial future: the S&P 500. The S&P 500, or Standard & Poor's 500, is a stock market index that measures the stock performance of 500 large companies listed on the stock exchanges in the United States. This dynamic powerhouse of an index is a barometer of the U.S. economy and is considered one of the best representations of the U.S. stock market. Now, why should you, an astute investor, consider putting your money into the S&P 500? We're about to explore 3 compelling reasons. These reasons are not just about potential profits, but also about risk management, diversification, and simplicity. So, fasten your seatbelts because we're about to take a deep dive into the world of investing, and more specifically into the S&P 500. So, without further ado, let's delve into the first reason why you should consider investing in the S&P 500. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Investing in S&P 500 offers one key advantage that stands out: diversification. Now you might be wondering, what exactly is diversification? Picture it this way. Imagine you're making a fruit salad. You wouldn't just fill the bowl with apples, would you? No, you'd want to mix some strawberries, some bananas, some blueberries. Each fruit brings something different to the table, just like each company in your investment portfolio. In the financial world, diversification is much like our fruit salad. It's the tactic of spreading your investments across a variety of assets to reduce risk. The idea is not to put all your eggs in one basket. If one company or sector takes a hit, the others could potentially offset the loss. So how does the S&P 500 offer diversification? Well, the S&P 500 is a stock market index that measures the performance of 500 large companies listed on the U.S. stock exchange. It represents a broad cross-section of the U.S. economy, spanning all major sectors from technology and healthcare to finance and consumer discretionary. This wide coverage gives investors exposure to different industries and companies, thus providing a high level of diversification. But why is diversification so vital for any investment portfolio? Well, it's all about managing risk. Investing can be unpredictable. Companies can underperform, industries can decline, and markets can crash. By diversifying your investments, you're spreading the risk. Even if one company or sector doesn't do well, others might. Just like our fruit salad, if the strawberries are a bit sour, the sweetness of the bananas and blueberries can balance it out. In the context of the S&P 500, investing in this index means you're essentially investing in 500 different companies at once. If a single company underperforms, it's only a small fraction of your total investment. The success of the other 499 can help absorb that blow. Furthermore, investing in the S&P 500 not only provides diversification within the U.S. market but also offers a degree of international diversification. Many of the companies in the index are multinational corporations deriving a significant portion of their revenue from overseas. This global exposure can be beneficial, particularly in times when the U.S. market is underperforming. To wrap it up, diversification is like a safety net for your investment portfolio. It helps to spread the risk and potentially smooth out the bumps in the road. And the S&P 500, with its wide range of companies and sectors, offers a straightforward and effective way to achieve this diversification. So, diversification is the first crucial reason to invest in S&P 500, but it doesn't stop there. There are more compelling reasons to consider this investment, and we'll delve into those in the next scenes. So, stay with us as we continue to unravel the allure of the S&P 500. The second reason to consider investing in the S&P 500 is its historical performance. When it comes to investing, past performance is not always an indicator of future results. However, it does provide a useful benchmark for evaluating potential investments. And the S&P 500, my friends, has a history that's hard to ignore. Let's take a trip down memory lane, back to the mid-20th century. The S&P 500 was officially introduced in its current form in 1957, but its roots go back to the late 20s. Since then, it has been a barometer of the U.S. economy's health and a benchmark for investors worldwide. Now, you might be wondering, how well has the S&P 500 performed over the years? Well, the answer quite simply is impressively. The S&P 500 has delivered an average return of around 7 to 8% annually, adjusted for inflation over the past half-century. That's a rather attractive figure, especially when you compare it to the returns from other investment avenues. For instance, let's juxtapose it with the average interest rate on savings accounts in the United States. That rate has hovered around a meager 0.6% in recent years. Even long-term government bonds, traditionally seen as safe havens, have had an average yield of around 2 to 3% in the last decade. The S&P 500 doesn't just outperform these options, it leaves them in the dust. But let's not stop there. The S&P 500's historical performance shines even brighter when you look at it through the lens of significant economic events. Take the financial crisis of 2008, for instance. Yes, the S&P 500 took a hit, like everything else, but unlike many other investment options, it bounced back with vigor. By 2013, just 5 years after the crisis, the S&P 500 had not only recovered its losses, but reached new heights. And today, it stands far above those levels, having weathered the storm of the COVID-19 pandemic and continuing its long-term upward trend. In essence, the S&P 500 has proven its resilience time and again, whether facing economic recessions, geopolitical tensions, or global pandemics. It has consistently delivered solid returns over the long haul, making it a cornerstone of many investment portfolios. Now, it's crucial to remember that investing in the stock market, including the S&P 500, involves risk. The value of your investment can go down as well as up, but with its historical performance as a guide, the S&P 500 offers the potential for robust, long-term growth, making it an attractive option for many investors. With such a strong track record, it's clear why the S&P 500 is a solid investment choice, but there's one more reason we need to discuss. The third and final reason to invest in the S&P 500 is its simplicity and accessibility. Imagine this, you're standing at the foot of a mountain, gazing up at its towering peak. The path to the top is steep, riddled with obstacles and no clear directions. Now, wouldn't it be delightful if there was a cable car available to take you straight to the top? Investing in the S&P 500 is much like that cable car journey. Simple, accessible, and primed to take you to your financial goals. For the uninitiated, the S&P 500 is a stock market index that tracks the performance of 500 of the largest companies listed on the U.S. stock exchanges. It's like a ready-made portfolio, saving you the hassle of picking and choosing individual stocks and reducing the risk of putting all your eggs in one basket. So, how does this translate into simplicity and accessibility? Firstly, you don't need to be a Wall Street wizard to invest in the S&P 500. There's no need to continually analyze market trends, no need to pore over financial reports, and no need to agonize over the right time to buy or sell. With the S&P 500, you're investing in a broad cross-section of the market, which historically has moved upwards over the long term. It's a set-it-and-forget-it kind of investment, ideal for both newbies getting their feet wet and seasoned investors looking for a low-maintenance investment. Secondly, the S&P 500 is accessible to everyone regardless of how much money you have to invest. Many S&P 500 index funds and exchange-traded funds, or ETFs, have very low or even no minimum investment requirements. This means you can start your investment journey with just a few dollars. It's a far cry from the days when investing was the exclusive domain of the wealthy. Today, the stock market is democratized, and the S&P 500 is a shining example of this. Additionally, investing in the S&P 500 is as easy as a few clicks on your smartphone or computer. Numerous online brokerages and investment platforms offer S&P 500 index funds and ETFs. And with the advent of fractional shares, you can own a piece of those 500 companies even if you don't have enough to buy a whole share. Finally, simplicity also means transparency. With the S&P 500, what you see is what you get. There are no hidden fees or complex structures. It's all upfront and straightforward, giving you peace of mind and full control over your investment. In a world where complexity is often mistaken for sophistication, the S&P 500 stands out with its simplicity. It's an investment option that strips away the noise and focuses on what truly matters, building wealth over time. With such simplicity and accessibility, the S&P 500 truly is an investment avenue that everyone should consider. In conclusion, the S&P 500 is a worthy addition to any investment portfolio. Let's take a moment to recap the 3 key reasons we've discussed today. First, we delved into the power of diversification. By investing in the S&P 500, you're effectively casting your net over 500 of America's largest, most successful companies. This wide berth allows you to spread your risk across various sectors, buffering your investments against the volatility of individual stocks and providing a more balanced, secure financial foothold. Next, we examine the S&P 500's historical performance. Over the past 90 years, this index has consistently delivered robust returns, outpacing many other investment vehicles. Its track record speaks for itself, a steady, long-term upward trend that has proven resilient in the face of economic downturns and market uncertainty. Remember, past performance is not a guarantee of future results, but it does provide a compelling argument for the potential growth the S&P 500 can offer. Finally, we touched on the simplicity and accessibility of the S&P 500. Unlike more niche or complex investment strategies, the S&P 500 is straightforward to understand and easy to invest in, even for beginners. With a plethora of index funds and ETFs tracking the S&P 500 available, anyone with an internet connection and a brokerage account can get a slice of this investment pie. It's a democratizing force in the world of investing, putting Wall Street's power in the hands of Main Street. So there you have it. Diversification, historical performance, simplicity, and accessibility. The trifecta that makes the S&P 500 an attractive investment option. But don't just take my word for it. Do your own research, consult with a financial advisor if needed, and make informed decisions that align with your financial goals. With these compelling reasons, the question isn't why you should invest in the S&P 500, but rather, why haven't you already? Now that you have the knowledge, it's time to take action. Just think about it. The S&P 500 is a gateway to diversification, a testament to the power of historical performance, and a symbol of simplicity and accessibility in the world of investments. It's not just about buying a stock, it's about buying a piece of the American economy. It's about believing in the power of innovation and the resilience of industry leaders. But remember, every investment decision you make should be a calculated move. It's essential to do your due diligence. Look at the trends, analyze the figures, weigh the pros and cons, get to know your risk tolerance and investment goals. Are you looking for short-term gains or long-term growth? Are you investing for retirement, for a dream home, or your child's education? These are the questions that will guide your investment journey. Remember, investing is not a sprint, it's a marathon. It requires patience, persistence, and a good dose of courage. It's about embracing the uncertainties of the market and turning them into opportunities. There's no better time than now to start investing. The future is not something that just happens. It's something you have a hand in creating. So, start today. Start with what you can afford, and gradually increase your investments as you become more comfortable with the process. But don't stop here. Continue to educate yourself. Stay updated with the latest market trends. Join investment forums, read financial news, attend webinars. The more you know, the better your decisions will be. And remember, you're not alone in this journey. There's a whole community of investors out there, ready to share their experiences and insights. So don't be afraid to ask questions, seek advice, and learn from others. Remember to subscribe, like, and share this video with others who might benefit from this knowledge. Until next time, keep investing and growing your wealth.